monthly chart which we've got in front of us, Tuesday 27th of October, 5 p.m. in the evening. And obviously we're running this gold chart monthly from a swing low here of 2008 of $681 and a high of 1900 in 2011. And I run a Fibonacci retracement, and you can see at the moment the important number is 61% retracement, coming in at 1150. And as yet we have been failed to see a monthly close above this level, and also holding it at the moment is a 10 monthly moving average, which on this red line here. So it's important as we come towards the end of the month, we would get a monthly buy signal if they saw a close above this level, which would be the end of this week. So obviously that's going to be crucial to look on. We'll kick down at the weekly chart and see what that showed us. You can see here I've got my Fibonacci zones painted on here at the present moment. This is the weekly chart. See the 200 weekly moving average has held this market below it, and at the moment it doesn't show signs of breaking up through it at the present moment. RSI is over the 50 at the present, but unless we see a break above this first green candle the first week in October, it looks as though we could see further sideways action or down to test the 10-day moving average here below the 1150 level, which is the important level on the monthly chart. And then coming down into the daily, this is ridiculous. The daily chart, and you can see here quite clearly that I've run a 200-day moving average and a 50 and a 10-day moving average, and you can see here that the 200-day has held this market below it all for the last last year and a half. We had the death cross here where the 50-day crossed the 200. That was back in September of 2014, and as yet the market has not failed to break above and give us a golden cross, reverse of that at the present moment. So at the moment we are still in a daily downwards trend, or obviously the monthly signal would be given if we saw a close above the 1150. You can see here I've put these red markers here, and that's been the failed to break above the 200-day moving average. You can see that happened in January when the 10-day crossed it and then quickly reversed low here and got sold into. This happened again in May and sold down here, and obviously looks like we've got the same happening here again. This will be the third time it's happened, but obviously RSI is holding above the 50 mark at the moment. So I would look for a buying opportunity if you're looking to trade on the long side, which would be a counter trend rally at the present moment, which would take us into November and December, would be this gap fill trade here. There was a gap left here at 1140, and that was in the middle of September. So I'd look for the market to come back and test this lower trend line here and open a trade at sort of 1148 with a target of 1238, and you put your stop below this last swing low here at 1095, giving you a risk reward ratio of 1.67. But obviously if this swing low is taken out, then obviously we're just following a similar pattern of what's happened the last two times it has tested the 200-day moving average. Obviously the reverse of that, if we see a break and a close above this swing high, say at 11,180, then obviously that gives us a positive sign, and then we could be on for a golden cross, the reverse of this awful this long-term downwards trend that the gold has been in a sideways sort of market action for the last 2 years. So that's what I can see at the present moment, and obviously I'll put an update. Thanks for watching.